I think that the yuan is being actually managed quite passively at the moment, and we see most of the direction in dollar yuan being a reflection of broad dollar direction, and the dollar is driving dollar yuan rather than the other way around. That could clearly change, and China can maintain the threat of using the currency as a weapon in a trade war. But at the moment, we don't see much evidence that that's happening, and actually, it would appear that it's still being managed against a broader basket of currencies, and it's the dollar that's general direction that's driving dollar yuan largely.
Yeah, where do you think the dollar is going to be headed, let's say, over the slightly longer term, over the next 1 to 3 months?
So we still think higher. The consensus, I think, is still negative for the dollar. We started the year with a very negative tone for the dollar. If you look at analyst forecasts, the consensus is still that the dollar goes down broadly going forwards. And I think the reasons for that are the twin deficits, the prospect of relatively strong global growth. We think the dollar direction is much more conventional than that. It's being driven by policy divergence in the dollar's favour, and that is a feature of our expectations going forwards, that the Fed continues to tighten. The rest of the world in aggregate does very little in terms of policy. So against the consensus view, we think the dollar just continues to grind gradually higher for the rest of the year.
Yeah, it's hard to look at it if you're looking at different economies and think that the dollar is going to face weakness, but I guess I just wonder how much of that is already baked in. Jay Powell was a little less forceful than some people anticipated he might be. So maybe that's what you see happening in the market right now?
So I think the debate we have in the rest of this year is about what happens to Fed policy next year. I do agree that the direction of Fed policy for the rest of this year, and for that matter for ECB and BOJ policy, is pretty much set out already. Where I think we differ from the way the market is priced is the flat profile for rates through the course of next year. And as I say, I think the debate we have in the remainder of this year is whether the US policy moves more in line with the dot plot or more in line with the forward curve. And we tend more towards the dot plot, which is a steadier process of higher rates through the course of next year also. And that, I don't think, is in the price at the moment.